It's the biggest investor, the biggest shareholder, $12 billion invested into WeWork.
WeWork has suffered a loss of $397 million.
When WeWork launched in 2010, it was heralded as the future of work. Its offices were known for their modern, sleek design with amenities like high-speed internet, conference rooms, printing services, coffee stations, and even free beer on tap. It was a buzzword primarily serving a new generation of entrepreneurs, freelancers, startup founders, and even enterprises. At its peak in early 2019, WeWork had locations in nearly every continent around the globe and had a whopping valuation of $47 billion. But by the end of 2019, just before it attempted to go public, the truth behind its shaky business model came out. The company just wasn't making as much money as people had thought, which led to a significant devaluation of the company from $47 billion to just $10 billion and a withdrawal of the IPO. Its co-founder and CEO, Adam Neumann, also stepped down from the company. WeWork has since made many leadership changes, restructuring, and cost-cutting measures in hope of turning the company around. But nothing seemed to pan out for the struggling company ultimately. If the global pandemic wasn't enough to halt its business, in a post-pandemic world, workers are departing offices for remote work. And according to WeWork's Q2 earnings report, the company said that they have substantial doubts about the company's ability to continue. Hi, and welcome to another episode of Dark Mode Digest, where we explore today's most important topics in the tech industry. In this episode, we'll delve into how WeWork was founded, its shaky business model, its controversial founder and former CEO, what went wrong with the 13-year-old company, and its current fallout. We'll also dive into where Adam Neumann is today. Stick around to the end as this is a juicy one. Here we go. In 2010, WeWork was founded by an Israeli entrepreneur, Adam Neumann, and his American counterpart, Miguel McKelvey. They were inspired by the high level of empty office spaces following the 2008 financial crisis and growing number of freelancers and startup founders. The idea was that you could rent a desk or working space for as long or as little as you needed, and could mingle with other freelancers or startup founders. They actually previously established an eco-friendly co-working space in Brooklyn called Green Desk, which they sold to another company and used the profits to start WeWork. The first official WeWork location opened in April 2011 in Soho in Manhattan, New York City, which aimed to offer co-working spaces for entrepreneurs, startups, and freelancers. By 2014, WeWork had 51 locations in the US, Europe, and Israel, with plans to expand to every continent on the globe by 2017. In 2016, the company grew to a valuation of $10 billion and was dubbed as one of the most innovative companies in the world. At the end of the year, they had raised more than $1.7 billion in private capital. The hype was real. WeWork was essentially a real estate company, but the founders knew real estate wouldn't sell to investors and wasn't cool in the booming age of tech startups. So they insisted on marketing the company as a tech company and made bold claims to want to change the world. They called their office spaces physical social networks as opposed to just offices. They essentially wrapped their normal offerings, which were desk spaces, in the appearance of a cultural revolution. And this was ultimately their demise. They rebranded their company as the We Company and opened up new ventures like We Live for residencies and We Grow for education. But all the rebranding and marketing couldn't help their unstable business model. WeWork takes 10 to 15-year leases on spaces, managed with guarantees that last 6 to 12 months in order to mitigate the company's risk. They frequently get anchor tenant discounts of about 10%, in which they need about 60% occupancy to cover costs. They often repurpose their leased spaces and buildings to improve their standing, as well as track neighborhood changes and predicted gentrification. This added more value to their company, which gave them the upper hand to renegotiate terms with landlords. All this while growing its community of knowledge workers, which embodied the early startup culture, and they expanded to more enterprise clients as well. Organic conversations and chance encounters were perks for many who saw real social value and world-changing ideas emerging from their office spaces. The company claims 70% of its clients have done business with other people in their shared spaces. This, bundled with its multi-billions of dollars in funding and massive valuation, WeWork was the hottest startup at the time. But the truth is, it couldn't retain its tenants long term, and it failed to keep 60% occupancy in its spaces. Real estate is crazy expensive, and WeWork was bleeding cash to pay off its costs and terms with landlords. So they went through a vicious cycle of seeking out more funding to pay off its growing costs, but failed to turn these into profits. The Despite promoting itself as the next innovative tech startup to shake up the industry, WeWork was actually just an old school real estate firm. Its huge funding rounds didn't go as far as they would in the tech firms it was modeling after, since it had all the real estate overheads of old school landlords. WeWork's business model was catching up. The company was doing something called leasing long and subletting short. Most of its tenants weren't long-term renters. Even though workers could rent space for as long or as little as they could, WeWork had to pay the whole rent for the space, regardless. It was bleeding cash, and investors began to notice. Meanwhile, its CEO at the time, Adam Neumann, was increasingly becoming a liability for the firm. He was selling equity for his own benefit and using profits to buy his own real estate to eventually lease back to his own company. It seemed as if Adam knew his company wouldn't survive long term, so he was doing the most he could to profit off his company while it was still alive. Adam is a tall Israeli businessman and is often billed as a genius. His long hair and enigmatic way of speaking brought people to follow him and prompted the cultish We family. His charisma helped him lure billions of investment money for his startup and made people believe in his vision for WeWork, even though it was all nonsense. But as WeWork was growing attention, his unusual behavior began to show. He frequently smoked weed and apparently illegally transported marijuana across international borders on a private Gulfstream jet he bought for WeWork using $60 million of investor money. He had a turbulent management style and claimed to want to live forever, put WeWork on Mars, and become the president of the world. All this caught up to him, in which he was pushed out of his own company in 2019. But he ultimately left with more than $2.1 billion in total from his entire experience with WeWork. Basically, the only aspect of WeWork that was profitable was Adam himself. More on this in just a moment. It all began to crumble for the company in 2019 when it announced its intent to IPO that year. Before the IPO began, WeWork was valued at $47 billion, but after much scrutiny over its financials, WeWork was actually only worth $10 billion. In 2018 alone, the company lost a whopping $2 billion. It was nearing bankruptcy. Several lawsuits began to unfold which centered on race and gender discrimination and sexual harassment. Adam began selling some of his assets like his private jet, and WeWork made substantial job cuts, roughly 20% of its workforce or 2,400 jobs. WeWork paused its IPO plans, Adam was ousted as CEO, and the company's main investor, SoftBank, took control. WeWork still exists today, but it's on the verge of going bankrupt again. It IPO'd through a SPAC in October 2021 with a valuation of $9 billion. It was struggling even before the pandemic. Then, with the pandemic, workers ended their leases, and it seems like many have decided not to come back post-pandemic. Many companies have abandoned office spaces, and more workers are working remotely. Demand for co-working spaces have steadily declined over time. Recently, the company announced a net loss of $397 million for the second quarter on revenue of $877 million. WeWork's interim CEO, David Tolley, noted in a statement, excess supply in commercial real estate, increasing competition in flexible space, and macroeconomic volatility drove higher member churn and softer demand than they had anticipated, resulting in a decline in memberships. WeWork has a massive uphill battle to turn itself around. It needs to cut rent and tenancy costs through restructuring actions and negotiations of more favorable lease terms, increase revenue by reducing member churn and increasing sales, control expenses and limit capital expenditures, and once again, seek additional capital like issuances of debt or equity securities or asset sales. WeWork now has a market cap of just $300 million with its stock trading below $1. They went from a crazy high valuation of $47 billion with a total of $22.2 billion in funding to now having a mere market cap of $300 million. Yeah, WeWork's investors aren't getting their money back, especially SoftBank, which invested more than $10 billion into it. SoftBank CEO Masayoshi Son said he was foolish to have invested in WeWork. But what about WeWork's co-founder and former CEO, Adam Neumann? The only one who came out on top from WeWork was Adam. He received around $1.7 billion from SoftBank for stepping down. More than $100 million was for consulting fees. And where is Adam now? Well, he's on the run again with new ventures. Flow Carbon is one of his newest startups. It's a tokenizing carbon credit trading platform that runs on the blockchain. As for his second company, well, he's once again in the real estate business. He launched Flow, which seeks to revolutionize the residential housing industry. Remember when I talked about Adam's charisma and ability to persuade people? Well, Andreessen Horowitz, a prominent venture capital firm known for early investments in Twitter and Airbnb, has pumped about $350 million into his newest venture, which values his startup at more than $1 billion. Like, what? The co-founder and general partner at the VC firm, Mark Andreessen, has said, Adam is a visionary leader who revolutionized the second largest asset class in the world, commercial real estate, by bringing community and brand to an industry in which neither existed before. It seems like Adam can sell peanuts to people allergic to them. WeWork has been named one of the most overvalued companies in the world. It has a tough uphill battle if it's going to avoid bankruptcy. Its ability to continue operating is contingent upon the successful execution of its management's plan to improve liquidity and profitability over the next 12 months. As for Adam, the guy can't be trusted. So, the moral of this story is don't judge a book by its cover. Don't always see companies with large valuations of funding and high valuations as an indicator that the company is doing well. They could be the next WeWork.